Hey everyone, welcome back to Corporate Decoder. Fidelity Covington Trust just filed its latest quarterly report, and I am digging into the investment details to see where the money is flowing. Quick note, this is not financial advice, just my take on public filings for educational purposes. We're going to decode what these funds are investing in and what that could mean for their future performance. First up, let's dive into the Fidelity International Value Factor ETF. This fund focuses on international stocks that are considered to be undervalued. As of the 30th of April 2026, the total fund size was a significant $532 million with 109 holdings. Looking at where this money is invested, the biggest slice of the pie, 26%, is in financials. This tells us the fund sees value in banks and other financial institutions. Following that, industrials make up 19.1%. It's interesting to see that information technology is only 9.6%. Suggesting the fund isn't heavily leaning into tech giants right now. Instead, 8.4% is in healthcare. Another sector that often shows stability, consumer discretionary and materials are each at 7.7%, showing a balanced approach across different parts of the economy. When it comes to the types of investments, it's no surprise that 99.3% are common stocks, meaning they own pieces of companies. The rest, 0.7%, is in short-term investments and other assets, which is typical for managing daily cash needs. Geographically, Japan stands out significantly. This fund has 22.9% of its assets invested in Japan, more than any other single country. Canada is next at 13.8%, followed by the United States at 9.6%. Germany and France are also substantial holdings, around 9.3% and 9.2% respectively. This international focus is key for a fund aiming for international value. When we look at the top holdings, ASML holding NV is the largest at 2.7%. This is a company that makes chip-making equipment, very important for the tech industry. Kioxia Holdings Corp, a memory chip maker, is also a significant holding at 1.8%. Nestle SA, the food and beverage giant, is in there too, showing a blend of growth and stable companies. Shell plc, a major energy company, and Siemens AG, an industrial conglomerate, are also among the top investments. Next, let's shift gears to the Fidelity International Multifactor ETF. This fund also looks internationally but uses multiple factors to select stocks, not just value as of the 30th of April 2026. This fund was valued at $271 million with 205 holdings. The portfolio turnover rate is 103%. Which means they bought and sold stocks to replace more than their entire portfolio over the year, indicating a more active trading strategy compared to the value factor ETF. In terms of market sectors for this multi-factor ETF, financials are again a top sector at 22.5%. Industrials follow at 14.8%. What is interesting here is healthcare at 12.9% and energy at 11.6%, both larger allocations than in the value factor fund. Consumer staples is at 9.4%. And utilities at 8.5%. Notice information technology is a smaller part here at 4.1%. Geographically, Japan leads at 19.8%, followed closely by the United Kingdom at 14.9% and Canada at 13.9%. This shows a slightly different geographical tilt compared to the value factor fund. Looking at the top holdings, Shell plc leads at 1.8%, and AstraZeneca plc, a pharmaceutical giant, is at 1.6%. Roche Holding AG, another big healthcare name, is also in there. This multi-factor approach seems to be targeting different pockets of the market. Now, let's examine the Fidelity International High Dividend ETF. As of the 30th of April 2026, this fund had a size of $318 million with 106 holdings. Its portfolio turnover rate is quite high at 145%, suggesting a very active strategy focused on generating income from dividends. For sectors, financials are at 19.3%, energy is a substantial 16.1%, and consumer staples are at 13.2%. This makes sense for a high dividend fund, as these sectors often pay out consistent dividends. Consumer discretionary is at 12.9% and industrials at 11.7%. Geographically, Japan is the largest allocation at 18.2%, followed by France at 17.6%. Canada is also a significant player at 13.9%. This emphasis on Japan and France might be tied to companies known for consistent dividend payouts. In terms of top holdings, Equinor ASA, a Norwegian energy company, is at 3.7%. Total Energies SE, another major energy player, is also at 3.7%. Canadian Natural Resources Ltd, a big energy producer, is at 2.9%. These energy and resource companies often have strong dividend histories. Let's move to the Fidelity Emerging Markets Multifactor ETF. This fund focuses on emerging markets, which can be more volatile but also offer higher growth potential. As of the 30th of April 2026, its size was $508 million with 210 holdings. The portfolio turnover rate is 49%, which is moderate. The sector breakdown here is quite different. Information technology takes the top spot at a significant 31.9%. This is a much higher allocation than the other international funds we've looked at. Financials follow at 16.8% and consumer discretionary at 12.3%. Communication services are also prominent at 10.4%. Geographically, China is by far the largest holding at 25.6%. Taiwan is next at 21.8% and Korea is at 16.9%. This concentration in East Asian markets is typical for emerging market funds. The top holding is Taiwan Semiconductor Manufacturing Co. Ltd. at 11.7%. This company is absolutely critical to the global tech supply chain. Samsung Electronics Co. Ltd., the South Korean electronics giant, is second at 6%. This heavy weighting in semiconductor companies highlights the tech focus of this emerging markets fund. Now for the Fidelity Fundamental Developed International ETF, this fund as of the 30th of April 2026 was valued at $22 million with 101 holdings. The portfolio turnover is 66%. Sector-wise, financials lead at 26.7%, followed by industrials at 25.4%. These two sectors are a huge part of this fund strategy. Information technology is at 12.8% and healthcare is at 8.4%. The fund appears to be heavily focused on more established fundamental businesses. Geographically, Japan is the largest allocation at 21.7%, followed by the United Kingdom at 16.1%. The United States has a 10.1% allocation. Looking at the top holdings, ASML holding NV is the largest at 4%. Schneider Electric C, a major player in energy management and automation, is at 2.8%. Banco Santander SA, a large Spanish bank, is also a key investment. Let's take a quick look at the most recent financials mentioned in these reports. For the Fidelity Fundamental Developed International ETF, the net assets at the end of the period were $22 million. The total return for the 6 months ending the 30th of April 2026 was 5.67%. The expense ratio before reductions was 0.55%. Moving on to the Fidelity Fundamental Emerging Markets ETF. This fund was valued at $39 million with 113 holdings. The portfolio turnover is 71%. Here, information technology is the dominant sector at 37.4%. Financials are at 19.8% and consumer discretionary at 12.3%. This sector allocation is even more tech heavy than the emerging markets multi-factor ETF. Geographically, Taiwan leads at 24.5%, followed by China at 23.4% and Korea at 17.0%. These emerging market tech hubs are clearly driving this fund. The top holding is Taiwan Semiconductor Manufacturing Co. Ltd. at a massive 16.4%. Samsung Electronics Co. Ltd. is also a major position at 8.7%. The fund strategy is very concentrated in these two companies. In terms of its financials, the net assets for the Fidelity Fundamental Emerging Markets ETF were $39 million. The total return for the 6 months ending the 30th of April 2026 was a strong 19.81%. The expense ratio before reductions was 0.60%. Next is the Fidelity Fundamental Global ex-US ETF. This fund had $39 million in assets and 167 holdings. Its portfolio turnover is 45%. The sector breakdown shows financials at 24.4%, information technology at 21.9%, and industrials at 20.1%. This fund seems to be a blend of established companies in these key sectors. Geographically, Japan is the largest allocation at 12.5%. The United Kingdom comes next at 10.0%. Interestingly, China is at 7.7%, showing a more diversified approach than the pure emerging markets funds. The top holding is Taiwan Semiconductor Manufacturing Co. Ltd. at 7.7%. Samsung Electronics Co. Ltd. is at 3.4%. The fund clearly benefits from its significant exposure to these tech giants. Looking at its financials, the net assets for the Fidelity Fundamental Global ex-US ETF were $39 million. The total return for these 6 months was 8.84%. The expense ratio was 0.55%. Diving into the notes to financial statements, we see that these funds are part of the Fidelity Covington Trust. Registered as an open-end management investment company, they can invest in what are called Fidelity Central Funds, which are basically other Fidelity funds. This means that investors are indirectly paying fees for those underlying funds too. The accounting policies mention that investments are valued using quoted prices from active markets when available, or using other observable inputs or even the fund's own assumptions if prices aren't readily available. This is standard practice for valuing investments. When we look at the tax information, we can see the tax cost for each fund and how their investments have grown in value unrealized appreciation. For example, the Fidelity International Value Factor ETF has a tax cost of about $18.4 million, but its net unrealized appreciation is over $3.6 million, signaling good growth in their holdings. Let's circle back to the Fidelity International Value Factor ETF for a final look at its numbers. The net assets ended at $532 million. The portfolio turnover rate was 69%. The top sectors were financials, industrials, and information technology. Geographically, Japan was the leading market at 22.9%. The fund's top holdings included ASML holding NV and Kioxia Holdings Corp, illustrating a strategy that seeks undervalued international companies, even those in technology. For the Fidelity International Multifactor ETF, net assets closed at $271 million. Its portfolio turnover was quite active at 103%. The top sectors were financials, industrials, and healthcare, with a significant allocation to Japan at 19.8%. Its top holdings like Shell plc and AstraZeneca plc show a more diversified factor-based approach. The Fidelity International High Dividend ETF finished with $318 million in net assets. Its high turnover of 145% aligns with its strategy of seeking high dividend payers. The key sectors were financials, energy, and consumer staples, with Japan and France as leading geographic areas. The Fidelity Emerging Markets Multifactor ETF had $508 million in net assets. Its sector focus was heavily tilted towards information technology, at almost 32%, with China being the dominant geographic market. Finally, the Fidelity Fundamental Developed International ETF had $22 million in net assets. Its strategy focused on financials and industrials, with Japan leading its geographical allocations. Overall, these filings show a diverse range of international investment strategies from Fidelity Covington Trust. Whether it is value hunting, multi-factor approaches, high dividends, or focusing on emerging markets and fundamental strengths, each fund has a distinct approach and appears to be actively managed. The allocations reveal a clear focus on established economic sectors and key global markets, with a particular emphasis on technology in the emerging markets funds. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord.